Ladies and gentlemen, welcome back to our end of the market update for Wednesday, May the 19th of 2021. I am Camilo from Trending Wavez and glad to be here again doing another video for you guys. Now, if you watched last night's video, today's price action played out exactly how we anticipated it. Okay, now before I dive into that time frame, let's review the overall structure. All right, this structure we're still suggesting and anticipating one leg higher into the primary degree wave 1. Okay, primary degree wave 1 is up here. Just as long as we remain north of 398.05, which is this level over here, we should still be okay. Okay, we're coming close to it, guys. Very close to it. If we fall right below that level, then perhaps, just perhaps, as I've been saying it in these on these videos, on our nightly updates, we may have already topped out on the markets. Now, I don't think that's the case yet. There's still that possibility that we head on higher, which is why we will remain very cautious and patient until we see clarity. Okay? Until then, we are going to sit on our hands and wait this out. Now, this wave 4 pullback in the, I think it's the minute degree, is giving us a little bit of a pullback lower into that invalidation level, and it's coming very close, so keep your eyes out for that. Before I dive in there, let's review this here. So our upside target for the S&P or the SPY in the intermediate degree wave 5 and the minor degree wave 5 come in at 454.12 and 444.38, which is coincidentally the top channel of this, the top line of this trend channel, okay, which is projected from the wave 3 and the 4 to give us a theoretical completion of the wave 5. Once this level is set in, if we get it, then let's anticipate a 3-wave pullback into the wave 2 of the primary degree, which will correct this entire move. Okay, this level, as you guys know, we are anticipating it to be anywhere between the 23.6 to the 38.2% retracement of this entire wave advance. Now, I cannot label this just yet until we get a top here. Okay, now taking you lower into the 1 hour time frame, let's review the current wave count. So from the minor degree wave 4, we went up in 1, down in 2, found support at the 50% retracement, which is 384.69. 5 waves up into wave 3, and now we are going A, B, and down in C of the wave 4. Okay, now wave 4 comes in at anywhere between the 50% retracement or the 618%. We must hold the 618, okay, because if we go 100%, obviously we'll be invalidating this wave count, okay, and I don't think that could be the case. So this retracement is from the wave 2 to the wave 3. You get a level of for the wave 4. Now the 38.2, we've already surpassed it, so that's not valid, and we keep on going lower, and the 23 already surpass it. I mean, hey guys, we could potentially have already bottomed here, but I don't think so. Okay, this is still valid. If we continue on higher, I mean, we found support between these two levels, which is okay, but as I said, it's not the case. Why is it not the case? Let's dive into this zone. 30-minute time frame. This is what we have. Okay, let's adjust. Okay, here we go. All right, now from the May 7th high, when we completed the wave 3, we got 1, 2, acceleration gap in the wave 3, up in 4, down in 5 to complete the wave A. Okay, now we got 3 waves up in B. Now this is the level. This, or as you remember yesterday, I explained to you guys, we tried to take a trade yesterday anticipating a leg higher, but we were stopped out because obviously we couldn't count 5 waves here. We were anticipating this would be the wave 4, but it wasn't the case. But anyway, so the way we're looking at this now is that wave B came in at the 618% retracement of wave A, which is pretty valid from a Fibonacci retracement standpoint. I mean, we could even go up to the 786, which was a zone also of support, of resistance. All right, so this zone was resistance. Now go down in 1, up in 2. Today we gapped down heavily into the 2618 extension, of wave 1 compared to wave 2. So we found immediate support. Okay, so those levels are, if I do this again for you guys, so we take a retracement tool from the top of wave 1 to the low of wave 1 to the high of wave 2. Okay, and I'm just gonna pull this out over here, and we're going to turn on that level, and you're going to see that was spot on. Okay, that was spot on. Let's adjust this over here and here. There you go. All right, I like to be precise when I'm labeling these fib levels here. All right, now so what we're looking at is the following. We're looking at this as a three-wave pullback in the upside, right? A, B, and C. Now, obviously, wave 4 cannot surpass the territory of wave 1, but we still have some room there. Okay, we're looking at a possible retracement. Let's see the 618. Yep. Let's call this. Obviously, we already went over the 38.2, so I'm hiding these as of now. So our upside resistance coming in at the 411 or 415 and 410. That's the 50% or the 618 golden pocket ratio of the retracement from wave 2 to wave 3. You get a theoretical finish for the wave 4. Once we see this pullback come into place and start heading lower and start forming 5 waves down to complete this 5 wave of wave C of wave 4, all right, we see that levels come in anywhere between the 50% of the higher degree wave 4 or the 61.8%, which comes in confluence with a 100% a 100% extension of this whole wave A. A trick to show you guys of how to do that without any fib tools is that you take just a single line and you projected it from the high of wave B and you get your 100% extension. So that level comes in at the 399 spot 34 and the 398 spot 73. Now we could always bounce anywhere between the zone. All right, this is this area here that I'm about to highlight, actually from down here from this low. This area is the area where I foresee us coming into a stop in the wave 5. Okay, and once we find support, which will be also closing this gap. So this is the additional level that I'm looking at, 400 spot 67. So this gap here, and then that zone that I highlighted is a level of interest for me, so that I could wait and take advantage of an upside trade. Now, once again, I'm going to repeat this. If we invalidate this level, we will stop out of the trade and we'll have to reevaluate this entire wave structure, because that point will mean that we have already topped over here, which would have mean that this is the entire wave 5 of the primary or minor degree of intermediate degree wave 5, and that'll be a very, very, very shallow wave 5. Not out of the question, guys, but it's not common. All right, I mean, not that it's not common, let me take that back. It's just very shallow, and it's not, it wouldn't be too how to explain, it would be just weird. All right, that's the only word I have, but it's not out of the question. Okay, not out of the question. All right, now where are we with the Qs? Let's head on over to the Qs. So actually, before I dive in there, okay, just remember, all right, these are the levels that we're looking coming to tomorrow: the 415, the 410 for resistance, and then 5 waves pull back into the wave 5 or wave C of wave 4 to take us down to the 399 spot 34 or 398 spot 73. All right, now let's go over to the Qs. In the Qs, I already have it open. Let's review this wave structure again. So again, just like in the S&P, we're still looking for one more leg higher in the primary degree wave 1 to set in so that we can see if we get when we get a 3-wave pullback in the primary degree wave 2. All right, not until we set this high in, we can't determine where this low will be. Okay, so the way I'm looking at this is that up from the September lows, up in 1, down in 2, 3. Now we're looking at a flat correction in the wave 4, or a triangle, which we are currently in, taking us down to the 1 hour time frame. All right, that wave 4 can come in at the 23.6% retracement, which coincidentally comes in at the support of this bottom trend line. All right, so now we're down in A, 3 waves up in B, 3 waves down in C. Now we're looking at another 3 waves up into wave D, and then 3 waves down to wave C to complete this wave count. Now wave count invalidation for this level here, or for this count, comes in at the low of wave A, which is 297 spot 43. Okay, now in the event in the chance or the event that we invalidate and we break this channel, or sorry, we break this lower trend line support, okay, the alternate account that I have that I was working in the background is that we are, here we go, let me take you to the daily time frame. We are in an expanding triangle, all right, and so that's this low here from our preferred count. If we break this low, then what's going to happen is that we are within 1, 2 of an expanding leading diagonal. My apologies. So 1, 2, 3, ABC, 3 waves down, and 4, which will be a 100% retracement of this whole structure. Okay. Yep. Yeah, this whole structure, and that will come in at 303 spot 57. When we find support, if this is the wave count from this bottom trend line, okay, we will anticipate another leg higher to take us anywhere between the 100% to the 1618, which come in at 374 or 417 for the Qs. All right, guys. So that's our quick update for tonight. I hope you guys have been enjoying my pretty accurate labeling for our Elliott wave counts on the S&P and the Nasdaq, the way we've been tracking this. If you guys are interested in Elliott everyday Elliott wave interpretation for the Qs and the SPYs, we update our members in the Discord group every day in the morning, afternoon, and throughout the trading session if anything really drastically occurs. Or if you want an individual chart request for any stock that you're holding or you're planning on trade and you need analysis or need help with, don't hesitate on hopping over to the Discord group. Okay, we are running a free trial currently. Looking forward to working with you, and as always, I appreciate your time. Subscribe to the channel, hit the notification bell, and I shall see you guys tomorrow. Take care. Bye bye.